Hey folks, Brian Ferguson here with a 2020 update for individual insurance in California. A lot of things going on with the insurance market in California. I'm just doing this video because I'm having a lot of clients ask me the same questions. Thought I'd do a video and get it out to everybody at the same time. The key thing, we can't run quotes until November 1st. The carriers are able to renew their insurance during the month of October, but they're not publishing their rates for quotes. So what everyone's running around doing right now, what all the carriers are doing right now is they're going to their existing clients and say, hey, renew right now. Well, yeah, of course they want you to renew right now. There's no competitive market because quotes aren't available yet. So I can't do quotes for anybody until November 1st at the earliest. Literally, the carriers have until October 31st to turn in their rates for public consumption. A few of them already have, but if this year's like every year for the last 10 years, or last 6 years, when Obamacare came in place, literally there will be a couple carriers that wait until October 31st, late in the day, and then turn in their rates. So come November, I will be in touch with all of my clients, um, and we'll see what's competitive out there for you. Here's the good news. California has already the insurance commissioner has put numbers out that said that they expect rate increases on average this year to be a little bit less than 1%. I think the average was 0.8%. So overall, we've got a really good market right now. That's due in large part to the fact that California um, bucked the federal trend and kept the individual mandate in the state. So if you live in California, you have to have insurance. Even though you don't on a federal level anymore, California will make you pay a tax penalty, $695 per adult. I believe it's $295 per child, um, or 2% of your income, whichever is greater. So it can actually be a fairly large penalty to not have health insurance. And that'll be on your California state taxes, not on your federal taxes like it used to be. The good news there is because that encourages people to sign up for insurance, it actually gives us better rates. Other states around the country are experiencing higher increases than this, in large part due to the fact that they don't maintain the mandate. That was a very important part of the Affordable Care Act, Obamacare, whatever you want to call it, was having that mandate makes people buy insurance. Typically, people who don't buy insurance are healthy, and the carriers like having the healthy people in there who pay premiums but don't usually use the insurance so much. So California, we're looking at on average 1% increase this year. Um, Whenever you have averages, you personally might be on a plan that goes up 5%. You might be on one that goes down 2 or 3%. We never know exactly what's going to happen with your rates, although carriers are starting to get the renewals out to our clients and we can see what they are. I've had a couple clients come back to me and say, wow, my rates went up a lot. But in those cases, it's because they turned 60 or 50, or they hit a new age bracket that bumped their rates up. So, we'll see what happens to each of you individually. Most of my clients are in the San Diego market. Uh, Carrier networks remain basically the same. If you love Scripps, you're going to be looking at a Blue Shield PPO or a HealthNet HMO. That's the options. HealthNet's HMO is quite a bit less expensive. Again, I haven't seen 2020 rates yet, but it looks like they're still going to be. Then some people look at that and say, yeah, let me save the money. And you can get a gold plan on HealthNet for what the silver plan on Blue Shield costs. But some people say, I don't want to be in the HMO world. I'd rather have a PPO. That's fine. We can do whatever fits your needs and your budget. Carrier networks don't seem to have changed much, though. So if your network is working well for you, the same carrier will continue to work well for you. I guess the other big change in the California insurance market is Covered California. Covered California has changed the amount that they're willing to pay for a subsidy. So what you're going to see is a lot of people who in the past have not been eligible for a subsidy who now are eligible for a subsidy. They dramatically increased the income threshold. So in the past, if you're a husband, wife, 2 kids, you could get a subsidy, excuse me, up to about $100,000. I believe the number was 98,000. You could still get some amount of subsidy. That number's gone up by almost 50%. So for that same family in the past, that maybe you earned $110,000, that number's now gone up to right at 150, and you would be eligible for a subsidy. So included in this email or in the link on YouTube that in the down below, um, I will put in a subsidy calculator, and you can go in and kind of do your own math. Plug your zip code in, plug your ages in, plug your annual income in, and see if you're eligible for a subsidy. There will be quite a few people in California who in the past were not eligible for a subsidy, who now will be able to have the state of California pay for some portion of their premium on their behalf. So that'll be a big plus. Um, Overall, this isn't going to be an ugly renewal year. Like I say, small increases, subsidies for people who weren't eligible before, not a bad year. But in between, if you watch this video, shoot me an email. Let me know if things are okay for you, if your network has been okay, if you need to access into other doctors. Those are going to be the driving factors to change a plan. Otherwise, if the plan's working for you now, the vast majority of people are going to stay in the same place. Forgot to turn off my phone. Thanks. I'm done, folks. Take care.